Webinar has been opened, sir.
Good afternoon. Hope everyone able to listen to me.
Yes, you're audible.
Thank you. If all are ready, we can commence. I think let others join. Just cross 100.
Yeah. Let's start.
I think all of you can switch on your camera if all are available. So that we should know all are available. So with the permission from all of you, let's commence the program.
Sure.
Very good afternoon to all of you. Mr. Girish Chand, Senior Partner, MCA Gulf. Mr. Arjun Shankar, Senior Director, Dubai CommerCity. Ms. Sandhya Chandrasekhar, Manager, MCA Gulf. Mr. Thomas Joseph, again from MCA Gulf. And participants, ladies and gentlemen. Welcome to all of you to this knowledge sharing session organized by FIEO with the support of MCA Gulf and Dubai CommerCity. During past 2 decades, we are associated with various free trade zones in the GCC region to set up offices, warehouses, and manufacturing facilities to Indian entrepreneurs, which has resulted in large number of Indian companies started operating from this region for expanding globally by utilizing various avenues available to them on doing business. Not only in UAE, but to other GCC countries, and also they're able to expand their business to other WANA region and other CAS region. This business plan became very successful as well, especially for Indian companies. That's the reason we can see large number of Indian companies operating from, especially from UAE. During interaction with investors and especially our members who is doing a business with UAE, many of them are mentioning about some of the difficulties which they are facing, mainly due to ignorance of various regulations, because they are operating from Indian soil and they always think that, okay, it's what we are doing is to be followed. But there are, even though it is doing business is much easier than doing business in India, but there are some rules and regulation and other compliances which need to be done properly and timely. So that's the reason all of us are here to explain you various nitty-gritty of all these rules governing operation in UAE. For benefit of the speakers present here, all are from UAE. Let me introduce about the organization, FIEO, a small brief. We are apex body of all export promotion organizations in India, set up by Ministry of Commerce, Government of India. And more than 72% of India's trade happens to FIEO members who are into various product groups and services. We closely work with Indian missions abroad, various organizations, chambers of commerce, etc., for promoting India's trade across the globe. We also organize B2B meetings and take various trade delegations, organize exhibitions across the globe, and also invite a delegation to India. And we also help incoming delegation to meet the potential customers, etc. These are some of the activities we undertake. And we also function as an advisory body for Ministry of Commerce related to international trade promotion. If we look at trade with UAE, during the financial year 2021-22, that's a financial year, India follows, but UAE is from Jan to December. As far as India is concerned, during 2021-22, India is the third largest partner with total non-oil bilateral trade value crossing 60 billion. Further, the two countries also signed a bilateral trade agreement, Comprehensive Economic Partnership Agreement, CEPA, which came to effect from 1st May 2022. The CEPA aims to boost India UAE bilateral trade to further to reach cross 100 billion mark by another 2030 by next 4 to 5 years. And if you look at the agreement, there is a lot of huge potential which gives due to this agreement. This tariff line is concerned more than 80%. It's already in the zero duty, and I think another 10 years period, it has been said that entire duty will be eliminated. And as far as India's trade present export products are concerned, almost 90% of the products comes into zero duty. So there is a huge potential for expanding further. And if you look at last 3 months immediately after signing agreement last July and August period itself, you see that we have a huge quantum jump, almost 14.5% growth in India's export to UAE. That shows the kind of potential we are having to expand our business. And if you're talking about the potential of trade, and one of the best option for Indian companies is to set up their operations based in UAE, and they can expand to other markets. So by that, I think you are able to utilize this FTA more effectively. That's one of the advice we want to give you, because many of them already proved that this option has been proved. So with this introduction, now let me introduce the speaker. Before that, the format of the program is that we have 3 distinguished speakers here. They'll be making their presentation. Further, we will have a Q&A session in the last. We have with Mr. Arjun Shankar, Senior Director, Dubai CommerCity. Will be making presentation first. Dubai CommerCity, many of you are already aware, but for those who is not much aware of this, I just want to have a brief introduction. It is the first and leading free zone dedicated exclusively for digital commerce, and it's having covering more than 2.1 million square feet. That's what the website says, and an investment of around $1 billion. And it is one of the primary place. It's located next to Dubai International Airport, and with the strategic location, this zone is specially designed to enable first digit commerce to fulfillment across the region. And it's if you are into digital commerce entities or the wealth industry or the knowledge industry, is the best place for you to expand your business. And Mr. Arjun Shankar is a Senior Director taking care of e-commerce solutions and partnerships. He's having more than 14 years of experience and outstanding track record of driving e-commerce supply chain solutions and transformation of large global retailers. He's heading the e-commerce division presently, and earlier you worked with IBM also, and in charge of e-commerce and supply chain software and solutions, taking care of Middle East and Africa. Before moving to IBM, you also worked with Alphatum Group. All of you are aware that it is one of the largest retail franchisee operators in the Middle East. With this brief introduction, now let me invite Mr. Arjun Shankar to make his presentation. Over to you, Mr. Shankar.
Thank you, Mr. Unnikrishnan. I will share my screen. Please let me know once you are able to see the presentation. Is this visible?
Yes, please go ahead.
Okay. Very good afternoon to all distinguished guests who joined the webinar today. It's an honor, a privilege for me to be presenting Dubai CommerCity to all of you today in partnership with MCA and the Federation of Indian Export Organization. We hope that over the next 20 minutes, what I'm going to cover is really going to add value to you and make you aware of what Dubai CommerCity is trying to do and how can you grow your business into the Middle East with the support from Dubai CommerCity. The agenda, I'll be talking about the state of FDI in UAE. We'll look at how UAE is doing overall compared to 2021 and 2022. What's the growth pattern, what it looks like. We'll go on to the rise of digital commerce. This is a key component as we see as part of the growth trajectory. Is one sector which has seen exponential growth post-pandemic. And then we will also look at how Dubai CommerCity is supporting multiple global brands in enabling their business growth. And at the end, we'll be talking about what exactly are the products and services that Dubai CommerCity offers and how it can help you with your UAE business. So looking into the state of FDI in UAE, from a recent report published by UNCTAD, we see that UAE FDI inflows in 2021 is close to 20.7 billion US dollars. And if you just look at UAE's FDI contribution to the MENA region is 31%. And UNCTAD's World Investment Report positions UAE as the 19th in terms of global FDI. Specifically talking about Dubai, compared to all major cities of the world, Dubai ranks first in terms of global greenfield FDI projects. In 2021, there were 418 greenfield projects that were initiated in Dubai. And we see this trend continuing in 2022 as well. When we look at the 2022 numbers, which were published recently, at least for the first half of the year, compared to 418 projects from 2021, Dubai has already attracted 492 investment projects just in the first half of the year. And this is an 80% year-on-year increase. And this total, the value of it is close to 14 billion dirhams. Now, the primary industry sectors where we see this growth happening is the wholesale and retail trade, accommodation and food service, and computer system design software. So basically, these are the top sectors which are experiencing a massive growth, a lot of investment coming in from different parts of the world. Primarily, you can see USA, UK, and India are the top three in terms of the FDI projects. And the focus is on these primary sectors. When we speak specifically about the India-UAE trade relationship that Mr. Unikrishan was talking about, India is a key strategic partner for the UAE. And Mr. Unikrishan briefly mentioned about how the Comprehensive Economic Partnership Agreement is already creating a significant positive impact on the India-UAE trade. There has been a 14% increase compared to 2021 in terms of Indian exports to UAE. This is very promising. And obviously, with support from the leadership of the two countries, this is only going to grow over a period of time. And India and UAE would obviously become more strategic in terms of their overall trade partnerships in the coming years. Now, when you consider this growth that has happened post-pandemic, this is really, really massive and very impressive. The pandemic has actually changed the way trade happens globally in a lot of ways. Although we are coming back to the normal, but the new normal has been defined by a lot of factors that surfaced up during the pandemic. Right? People's buying behavior, consumers' expectations have changed over the last couple of years. And I don't need to really talk about digital commerce because during the pandemic, we all have experienced how e-commerce or digital commerce has helped us remain connected in terms of buying and selling of goods. They've connected the consumer and the service provider. And there are, in fact, data to prove that. But quickly talking about what digital commerce is, and digital commerce, we all know, I mean, it's also known as e-commerce, is the process through which customers purchase goods and services through an interactive self-service experience using digital channels such as websites, online marketplaces, or even mobile apps and digital kiosks in shopping malls, which is again another thing which we do experience in Dubai, that people visit shopping malls and they're able to really make purchases through those digital kiosks in there. So overall, if we look at the growth of digital commerce post COVID-19, the contribution of e-commerce or digital commerce to retail sales is only growing since the COVID came in. I mean, if you look at UK, it's 24% of total retail sales is coming through digital commerce or e-commerce channel. India is already accounting for like 7% of the retail sales is being driven through e-commerce. And this is a report that McKinsey published just to show what huge impact the COVID had on the way people shop and trade happens, and how this is only going to stay, and this is what becomes the new normal. And we see this global trend also continuing in MENA as a region, Middle East, North Africa. In a recent report published by checkout.com, we can see that 82% people prefer social commerce, and this is becoming very popular among the millennials. People want to shop online, people want to shop through the mobile apps, and retail is getting transformed through the way digital commerce is happening right now. One interesting fact to note over here is in MENA, 33% of consumers are relying on cross-border shopping as a key driver of their e-commerce consumption. I'm based in Dubai, UAE. I may want to buy something from a global retailer who is shipping it from maybe India or Southeast Asia or UK. So 33% of the total sales is actually attributed to cross-border. This is really, really impressive when it comes to the potential it holds. And if you look at the e-commerce growth pattern only in the UAE, it's projected that by 2026, the UAE e-commerce market will reach 9.2 billion US dollars. And one of the key aspects of this is UAE is in its very early stages of digital commerce revolution. You consider US, UK, even India, these are very mature digital commerce or e-commerce market, whereas GCC is still starting afresh. So there is a lot of opportunity for businesses to really come in and make UAE the hub, which gives them the ability to reach out to close to 3 billion consumers within a 5 hours flight radius. And we actually are seeing that this trend is continuing to grow over and over. We are talking to so many different customers who are coming from different parts of the world. And the only question they have is, how can I, or how can CommerCity facilitate setting up an entity so that I can be at the hub, which is the UAE, and then ship cross-border and address different parts of the GCC, even extending to Middle East, North Africa, and beyond to other parts of the world as well. And based on the 2021 reports, we see consumer electronics, fashion, and food and beverage being the best-selling product categories. Now coming to how this business growth or the aspirations of these brands are being supported by CommerCity, I would like to talk about CommerCity and how it is actually supporting the ecosystem. The CommerCity, as Mr. Unikrishnan earlier mentioned, is the first and leading free zone which is dedicated to digital commerce. It's spread over an area of 2.1 million square feet with a value of close to $1 billion US. We already have over 180 clients in our 1 year of operation. And businesses are looking at CommerCity as a hub for their digital commerce journey or digital commerce expansion across the GCC. They are using our warehousing facilities, they are using our office facilities to set up their HQs and their central distribution centers. Our location is very strategic. We are right next to Dubai International Airport, which not only allows us to serve the local market, but also the other parts of GCC. As you can see, we're just 5 minutes from Dubai International Airport. And one thing, what this COVID and the pandemic has shown us, that consumer expectations have grown up immensely. The amount of same day or next day delivery that happens today, that has become the norm. People no longer want to wait for a 14-day delivery. They want things immediately, that instant gratification. So it's very, very important to base the business out of a strategic location that allows the proximity to the consumer. Getting the goods after the order is placed immediately to the consumer within, say, 3 hours, 4 hours, 5 hours, that is the level of expectations that is there today. I mean, when I go to India and I shop online, it is already happening in India. And now in UAE also, we are seeing the same trend. And that's where Dubai CommerCity's location becomes very, very critical and a USP for us to support business growth. Not only is the location, we also have a support ecosystem whereby we help our clients with a lot of additional ancillary services. If there is a business who wants to build their digital commerce platform or their websites or their marketplaces, we support with that. Payment gateways, integration, we support with that. We help our clients with warehousing solutions. So businesses who do not want to lease a complete warehouse, but prefer a pay-as-you-go model to begin with, and as they scale, they can move to a dedicated warehouse. We do provide managed e-fulfillment facility where we put in the manpower, the technology, the warehouse automation, everything to make sure that the business is able to meet their SLAs. So all of that we support. Digital marketing is something, again, to build the brand awareness, all of that we support. And also from accounting, financial management, or the standard business setup and custom support, these are additional things that we do support our clients with. So we are trying to build this whole ecosystem where we're not only the real estate provider, but also a growth partner by enabling all these multiple support services. Looking at our community, it is growing really at a rapid pace. I told you earlier that we have more than 180 customers. Some of the prominent names that you can see over here, we have the Coca-Cola HQ based for the Middle East, based out of our facilities. We have logos such as Maserati, BenQ, and again, e-commerce businesses such as Squatwurst, Birkenstock, Sisley, Hellman Worldwide Logistics. We also are privileged to have our partners with us, Digital Dubai, TDRA. These are government entities who are also supporting us in this full journey, along with our banking partner, Emirates NBD. We also have notable partners like MCA, who play a very, very important role in enabling our full ecosystem support for our clients. The idea is to create a community where every need of our client can be serviced from within the Dubai CommerCity park itself. Now, quickly talking about how can we help set up your UAE business. Our total footprint, as I mentioned earlier, is 2.1 million square feet. Our entire business park is divided into 3 clusters. The business cluster is where the office buildings are, the 12 office buildings that we have still under construction. We have activated 3 buildings already, and more to come over the course of the next couple of years. We also have a logistics cluster where there are 20 dedicated warehousing unit and 4 large fulfillment center. We even have 1 multi-client warehouse where we have the pay-as-you-go model, offering multiple different customers an ability to store their goods, and we take care of the fulfillment of it. And there is obviously the social cluster where there are restaurants, food halls, and cafe. Also, we have a multi-purpose hall where we can host exhibition and events. So in totality, for a business, it's not only with their office need that we can support, but also with their fulfillment requirements. And we're just trying to build a nice vibe, a nice community where people engage with each other and people are able to support each other's growth. Some pictures from our working spaces. We basically have, when it comes to offices, we have 4 types of products. The minimum one is a smart desk. It's a dedicated desk of 7.5 square meter, which entitles the business to visas, among other facilities. And then as your need grows, CommerCity can support you with shell and core offices where you design the whole office based on your need, your requirement. So it starts from 100 square meters. We also have fitted offices from 25 square meter. It's completely fitted with flooring, ceiling, lights. You just need to bring in your stuff, the furniture, and get started. And last but not the least, we also have a plug and play option, which are the premium offices, completely furnished, ready to get started from day one. When it comes to our warehousing, again, as I said, we have a multi-client warehouse, which is a pay-as-you-go solution. It is operated by our partner, Hellman Worldwide Logistics. We also have dedicated LIUs, which are smaller, 367 square meter, ideal for clients who want to have their own warehousing space. We also have the e-fulfillment center. This is specifically designed for digital commerce operations. The way it is built, the way it is operated is very much aligned with what the needs of a digital commerce business. We also do provide optional fitted solutions where we can build the mezzanine floors, the conveyor belts, entire automation can go in. In addition to the space, we also are focusing on sustainability. So we have the rooftop with solar panels for generating clean energy, because this is a key focus for us, not just us, for the world. Currently, we are very, very focused on ensuring that we have built sustainable products, and we support our clients, our partners also with sustainable solutions. In addition to that, on-site guidance is provided from a logistics and customs perspective as well. So before I wrap up, summarizing the key benefits, in addition to the standard benefits offered by any free zone related to the tax incentives, related to the 100% ownership incentive, in addition to all of that, Dubai CommerCity's key differentiators are its strategic location, the tailored business setup solutions. We understand every customer is different, the needs are different. So we are very flexible in terms of providing tailor-made solutions. We are focusing specifically on digital commerce. That's the core for us. And so we are supporting them with our ecosystem of services and logistics services to help the growth of our clients. And also we are trying to be a sustainable free zone and thereby contributing back to the earth in whatever way we can. I hope these information were helpful and beneficial. Towards the end, during the Q&A session, please do feel free to ask questions, and we will be here to address. I also have with me on the panel our expert on trade and compliance, Mr. Wahid, who will also be with me during the Q&A session. But if any of none of you wants to even reach out to us, more than happy to connect. My email address and my mobile number is there on the screen right now. Thank you very much for giving me the opportunity, and I hope you have a very, very productive rest of the session. Thank you. Over to you, Mr. Unikrishnan.
Thank you, Mr. Arun Arjun Shankar. It's really very interesting, and you talked about the potential of UAE, and especially as a strategic location, and the potential of digital economy in the coming years. It's really it's not even whatever projection what you are giving. I think it's much beyond that, and I think there is a huge potential to that. Now let me invite our next speaker, Mr. Girish Chand. Mr. Girish Chand, representing MCA Gulf. They're having wide range of high quality services they provide, and starting from auditing, assurances, compliances, especially national and international related. Mr. Girish Chand is a senior finance professional with over 3 decades of experience in strategy, taxation, planning, finance, audit, reporting, corporate and finance governance, risk management, assurance functions, etc. He is currently heads the MCA Gulf compliance practice covering corporate tax, VAT, ESR, AML, UBO across UAE and GCC countries. He also has conducted multiple number of compliance seminar for large corporate companies, business councils, trade bodies, industrial groups, and government authorities. He regularly contributes articles in various newspapers. Mr. Girish has held finance leadership positions, including Chief Finance Officer for Enoch Retail and Marketing Divisions. And he's also well versed with joint ventures structures, and he playing advisory role for executive management. He's also currently serving as director on the board of few Mauritius-based companies. With this brief introduction, let me invite Mr. Girish Chand for his presentation. Over to you, Mr. Girish.
Thank you so much, Mr. Unikrishnan. It's such a pleasure to address such a premier body of India, the Federation of Indian Exporters, right? We from MCA would like to thank the FIEO body for giving us this opportunity, okay, and to kind of take you through the compliances in UAE. Okay, like Mr. Uni mentioned, compliances in UAE is basically comparatively easier as compared to the landscape in India, right? But I think over the years, the compliances have increased, and this is something which has happened over, I would say, the last 4 or 5 years. Okay, the first part of the increase in the compliance was in the nature of the VAT, because before that, it used to be the accounting and auditing related. And again, as possibly many of you must have experienced, okay, so the auditing requirements are per se, dependent largely on, some of the free zones wanting it. In the mainland, it is still something which is not strictly enforced. Okay, but starting 2018, with the introduction of VAT, I think the compliance sphere has now kind of become, little more, complex, not still as what is it in India, right? And subsequently, there have been the introductions of the economic substance, the UBO related, and what we might see in 2023 is the introduction of the corporate tax. So what I will do is let me kind of share my screen and take you through the presentation that I want to make. So I will cover the areas of primarily VAT and corporate tax, and then my colleague Sandhya, she will take you all through the areas of ESR and UBO. So is my screen visible, Mr. Omnikrishna? Yeah, I guess the screen is visible to all. Okay, so we'll start primarily with a short introduction. Please bear with me. We'll talk about the MCA profile and then we'll take you through the various compliances. So as far as MCA is concerned, we are in the Gulf for almost now 14 years. Okay, and we basically have 7 locations. We are present in the GCC, in UAE, Oman, Bahrain, and basically also in 2022 we have opened in KSA and Qatar, right? Of course, we have a collective experience of 300 plus 1500 projects, right? And 7 partners. Okay, and we are basically like a normal accounting, auditing, and consulting firm. We cover the entire gambit of services. So in short, right from an establishment of the company, we advise companies on structuring, corporate formations, okay, right up to the liquidation. So in between, whether it is accounting, taxation, due diligences, mergers, acquisitions, internal auditing, the entire gambit of services we provide. Okay, this is our partners, basically, and maybe you'll see one familiar face there. Okay, and we have a wealth of experience of people who have been both in industry as well as who have been consulting. So one of the unique propositions that we have is that a lot of our, the senior leadership has been in the industry. So in that sense, they are able to bring the industry experience also when they are doing the consulting experience. In terms of specialization, I think there are very few industries that we would have not covered. Okay, right from the government to basically manufacturing, transport, logistics, automobile. So practically most of the industries that are in this part of the world, we would have some form of association with them. Like I mentioned, we are basically in 5 locations currently. Okay, and these are some of our clients. Like I mentioned, we have got MNC clients, your clients in the financial services, real estate, construction, hospitality, transportation, consumer goods, okay, technology, okay, manufacturing and distribution, some of the government entities that you see here. Okay, even energy and resources we cover, and in the digital space and others, we also do have clientele. Right, so that's a short introduction about MCA. Now, regarding the topics, okay, primarily I will focus on value-added tax, right? So like I mentioned, value-added tax has been in existence in UAE from 2018, okay, and I think a lot of you people can relate to the GST in India, right? So in context of that, obviously it's an indirect form of taxation. Again, each stage, the tax applies on the value addition component. Okay, and as you know that primarily, the entities which are registered are only acting as a collection agent. So if your entire process is effective, there is no impact on your bottom line. You are either collecting the VAT from your customer or you're paying VAT to your supplier. And whatever is the net is effectively what you pay to the government. And the definition here is obviously VAT covers both, goods and services. Okay, and basically anybody who kind of supplies goods and services in the UAE for a consideration and who is doing it on a regular and repetitive basis, he basically qualifies in terms of the registration for VAT. Now, when you look at UAE, comparatively, the VAT is little simpler. Okay, obviously we have the element of saying that the supplies can be divided into the taxable supplies and the non-taxable supplies. So when we look at the taxable supplies, there is a one where the standard rated VAT of 5%. In UAE, VAT is simplified. We have only one rate of tax, which is 5%. So anything that qualifies as a standard rated supply, the rate of tax would be 5%. Okay, in fact, the way to look at it is that except for the exceptions that are basically provided, whether it is zero rated or exempt or out of scope, any other kind of services or any supply of goods would qualify for the standard rating. So what is the zero ratings? I think sometimes people confuse zero rating as being an exempt supply. So just for clarity, there is a rate of tax which is applicable at 0%, which means that it is a taxable supply. However, the rate of VAT which is applicable on those kind of supplies, it is 0%. And we will see further what are the various categories. And these are specific categories for which the zero rating would apply. Now, when we come to the non-taxable supplies, again, there are two types of supplies. There is something which is called as the exempt supply, and people generally tend to confuse between zero rated and exempt supplies. So like I mentioned earlier, a zero rating is a form of taxable supplies, whereas when you talk about exempt supplies, they are generally non-taxable. However, in case of these exempt supplies, the reporting needs to be still done in the VAT return. So there is a specific box in which whenever you do the exempt related supplies, you are expected to reflect the value. However, there would be no VAT applicable on those transactions. The other type of non-taxable supply would be in the nature of out of scope. I will cover zero rated and exempt in a little more detail in the subsequent slides. Okay, when we talk about out of scope supplies, generally, this would mean that effectively the supply is not taxable in UAE. And what are the scenarios where they will not be taxable in UAE and would be out of scope? Primarily when you talk about a third port shipment, as far as the goods are concerned, okay, if the goods are moving, say from India to say Saudi Arabia, okay, and you have an UAE entity effectively, and the UAE entity is purchasing from the Indian entity, okay, and supplying to the Saudi Arabia entity. However, the goods are moving directly from India to Saudi Arabia. So even though the UAE entity is invoicing the Saudi Arabian entity, this particular kind of supply would be out of scope. And when we talk about out of scope, these are something which are not required to be reported in the periodic VAT returns. However, you are expected to maintain the records for such out of scope transactions. So whenever you have any kind of FTA related query or maybe an FTA audit, you would also be expected to provide the details of the out of scope transaction. So that's why it is important to kind of tabulate and keep the details of the out of scope transactions. Now coming back to the zero rated supplies, like I mentioned, there are very specific kind of zero rated supplies, and these are the only ones in which you can zero rate it. So primarily if you talk about the export of goods and services, which means that the goods are in UAE and from UAE you are exporting it to outside UAE. So those kind of services would qualify for a 0% VAT. Okay. Now there is the just going back to the out of scope. Okay, there is the context of when, for example, if you're operating from a designated zone, okay, like we have the Dubai CommerCity, right? And if you get goods into the Dubai CommerCity, and from here, if these goods are going to say Saudi Arabia or say going to say Qatar from here, okay. So those kind of supplies which are happening from a designated free zone, those would qualify as being for the purposes of out of scope supplies. So they are not really coming into the category of export of goods. Export of goods would basically apply in case of a normal kind of, basically free zone, or it would apply in case of basically from mainland when you're doing the export of goods. Okay, similarly, where services are provided to outside of UAE, those also will be qualifying for a zero rating, right? Also, in case of your residential buildings, I think within the first 3 years of the first supply, or like if supply is made within 3 years, the first supply. So up to that point, those kind of the first contracting is considered as zero rated. Okay, and primarily that is to allow basically the builder to take advantage of all the input VAT that incurs in terms of the construction. So he's able to recover, because in a zero rated supplies, you are entitled and you can recover the input VATs that are there. Similarly, where we talk about the transport, international transport, the logistics sphere, whether it is goods or passengers, those also are zero rated. Right, means of transport are also similar. Newly converted residential building is where the buildings there is some major kind of refurbishments. Those also will be entitled on when the refurbishment happens as such. Educational services, most of them are zero rated. However, there are some exceptions as far as the educational services. Similarly, with the healthcare services, the healthcare services which are primarily related to basically providing a preventive or a curing kind of services, those are basically would be treated as zero rated. However, if there are cosmetic related kind of healthcare services, then they would be at the standard rate. Even the basically when we talk about the precious metals, like largely it is the purity rate is 99.9%. If you're dealing with that, those also would qualify for a zero rating of supplies. Now, what are exempt supplies? Again, like I mentioned, exempt supplies are supplies where effectively there is no VAT charged as such, right? And in case of exempt supplies, you will not be able to take the related input VAT. So it becomes a cost for the company wherever they are dealing with exempt supplies. And there are very few exempt supplies as such. One is in case of financial services. Largely, if it is margin-based kind of transactions as such, they would qualify as exempt supplies as such. But however, where there is a fee-based kind of transactions, that would basically be standard rate. This is more applicable in case of financial institutions and exchange houses. Now, residential buildings, that is after the first supply, they will be treated as exempt. So when the rental is there after the first supply, subsequent supplies, they would be treated as exempt, and they would not be able to recover the related cost on maintenance and stuff. Okay. Similarly, local passenger transport is also treated as exempt supply, so that there isn't a impact on the consumer per se. So if you look at the exempt related supplies, they are more kind of geared towards possibly not increasing the burden on the common consumers. Because when you look at VAT, ultimately the burden of the VAT is borne by the ultimate consumer. Between the B2B transactions, there is no really impact, as I mentioned earlier. Similarly, with bare land, if a buy-sell is there, or even if a leasing is there of a bare land, those would also be subject to or be treated as an exempt supplies. Okay, now we look at it from a perspective this is more relevant for people who especially the Indian entities, if they have got their subsidiaries or their companies here, or if they are basically dealing with customers here. So what happens in terms of the place of supply rules as such when we talk about UAE? So we have broken it up into 4 components. Okay, so one is where we talk of somebody who is in UAE, okay, registered in UAE, and who is doing a supply within UAE. Okay, so in that scenario, except for whatever we saw as zero or exempted and stuff, rest of them, all of those supply of goods and services within UAE would be treated at 5%. Now, like I mentioned earlier, wherever you are having the basically the supplies outside the UAE, in that context, basically the rate of VAT will be 0%. The third scenario is where effectively you are doing a supply to a consumer outside UAE. Okay, and what we are referring to a B2C supply. This would be very relevant for possibly an e-commerce kind of industry where you're based here and you're doing the supplies to somebody who is outside the UAE, largely a B2C related supply. In that context, this is where it's a registered entry. I'm sorry, this is where you're supplying to a registered entry. You're basically doing a B2B supply in case of the implementing state. Now, implementing state for the purposes of VAT are the GCC countries which have done the implementation of VAT. And currently, if you look at the implementation of VAT, we are having VAT in KSA, we are having VAT in Oman, and we are having VAT in Bahrain. So in case of these kind of supplies, effectively the entity which is there in the country, it will kind of do the accounting. And you must have also seen whenever you are exporting to UAE entities, and if they are the importer on record, so they do something what is referred to as a reverse charge mechanism. So they in turn kind of take on the VAT liability on your behalf. So you are not expected to register in case of a B2B supply if you're purely operating from India. But however, if there is a B2C supplies from UAE, okay, and this is the case of what I was referring to the, basically the e-commerce industry, right? So if somebody is in the mainland of UAE and is doing supplies to consumers in any part of the world, right? Effectively, where then in that context, and it's a B2C supply, then you would be expected to kind of bear the look at it from that country. For example, if you take the case example, if you're doing a B2C supply from UAE to a KSA customer, right? In that context, you are liable for the VAT which is applicable as far as the consumption which is happening in KSA. So in that context, either if you are above the threshold limits, you will be expected to register. However, when the goods go there, also, along with the customs, you'll be expected to pay the VAT which is due on that transaction. This is where I refer to the imports from outside UAE. So if you as an Indian exporter are exporting the goods to your customers in UAE, so they would basically take on the VAT liability and they would basically do the VAT on a reverse charge mechanism. And in fact, in the UAE, there is a facility unlike other parts of the world where on the import related VAT you have to pay. In the UAE, the customs and the FTA are linked. So effectively, whenever somebody is importing, automatically if they are registered for VAT, their VAT portal is populated with the VAT that they would need to pay on the transaction. However, if that particular goods are used for taxable supply, they can take credit. So what it means is that in that kind of a reverse charge mechanism where they can take the credit, right? There is no really outflow that is applicable, and it is just a settlement in the return which happens, okay? And there is no cash flow which is impacted for the local UAE entity. Now there is, as far as the time of supply, when does the VAT applicable as such, right? So basically it is either if you are getting the money as an advance or the delivery of the goods or the raising of tax invoice, whichever is earlier. So any of these kind of basically the time of supply, the VAT would be applicable. In case of a continuous supply, these are basically where you got a periodic contract and you're kind of basically doing a periodic billing. The examples would be in form of a rental related contract or possibly project related billing, right? In those kind of contracts, it is slightly different where if you're getting an advance, yes, you have to raise the VAT invoice for that value, or if there is a due date defined or the raising of the tax invoice, any of these occurrences, you're basically required to register. So for example, in a rental contract, if there are 4 payments that are due, so there is a choice that if they raise the invoice for the full annual value, then the VAT is payable on that. However, if it is the invoices are raised based on the PDC checks or the 4 checks that are due, in that case, the VAT is due during that point in time. Okay, primarily in terms of the threshold for VAT registration, right? Now, there is a mandatory threshold limit where effectively if the supplies exceed 375,000 in the past 12 months or in the upcoming 30 days, then you would be mandatorily expected to register within a period of 30 days. Okay, so that's where we see quite a few of the entities kind of, not being aware of this threshold limit, especially the timing importance, where you are, you are expecting to kind of cross this threshold. That is where you should start the VAT registration process, because the legislation here allows you a window of only 30 days to kind of do the registration. So it's very important that, you basically keep a track of your turnover, and wherever it is exceeding that turnover, then only, then you basically start the registration, maybe in advance of actually you basically reaching the turnover limit, so that you are within the time frame of 30 days for registration. Because if you do not register on time, as you would know, so basically there is a the basically late registration penalty, and the penalties here are quite hefty. Like for example, when you talk about a late registration penalty, so straight away there would be a 10,000 fine. Voluntary threshold limit, there the threshold limit, the similar kind of criteria of past 12 months or next 30 days. However, the taxable supply limit is 187,500. Now, this would be applicable where entities want to register on a voluntary basis and possibly, take, input tax credit. So those kind of scenarios. And sometimes we see also that there is also, when you're dealing with local entities, there is always a requirement coming about to provide the VAT TR number or the VAT registration number. So in case of that scenario, you could go in for a voluntary registration when you cross the threshold of 187,500 turnover. As far as the non-registered resident entities are concerned, these are like mainly applicable in case of a B2C supply. Because like I mentioned, in a B2B supply, the local entity, UAE entity, would basically discharge the VAT liability. They take on the burden of the VAT. But however, if you're a non-resident and you are doing like an e-commerce business and supplying to customers in UAE, then you are expected to basically register for VAT as such. And actually, there is no threshold limit really for this. Okay, so when we come to the compliance as far as VAT is concerned, obviously, VAT here is most of the companies have a quarterly return filing. Okay, and again, this is depending upon when you register. So UAE doesn't have a common date in terms of the filing. It depends on when you register. So it will be for a quarter, and you will be expected to file the VAT return and make the payment within 28th of the next month. Okay, so primarily, I think one of the things is the requirement is that you need to ensure that you're doing a proper filing of the returns. Okay, the other part of it is, I think when you look at the VAT returns here, they look very simple. Okay, there are just 10 boxes to fill. Okay, no attachments to provide. Okay, so I think one of the things we have noticed is that people tend to be little lax. Is that some places just they kind of calculate on the back of the envelope and kind of put the numbers. Sometimes they just look at the VAT ledgers and take the numbers and put in. Okay. However, what we have to remember is that whenever there is a FTA kind of an audit, okay, they will always go back to the books of accounts. So it's very important that that the proper reconciliations are done, not only with the so-called VAT ledgers where you capture the input VAT and the output VAT, but also with the turnovers that you reflect in your books of accounts. Okay, and we have found that quite a few of the entities, that is an area of weakness of seeing that whatever turnover you're reflecting, are they properly categorized into the various types, whether it is standard rated, whether it is zero rated, whether it is exempt or whether it is out of scope. So, and then you are reconciling the total values, and you can always imagine, because in UAE, it is a self-assessment process, right? And what we have seen so far is that by far the audits are few. However, there has been a recent kind of amendment to the VAT laws, where the FTA has basically mentioned that in case there is notices issued, then the statute of limitation would extend. So currently, the statute of limitation, considering that 2018 is the year of introduction, that would expire in basically in 2023. Okay, as far as 2018 is concerned. Now, what they have basically mentioned is that in case there is a notice, the statute of limitation would extend by another 4 years. So what this would basically mean is that you might be, if there is notices issued, then you might be expected to keep your records for another 4 years as far as 2018 is concerned. Of course, like I mentioned earlier, we need to ensure that we do a timely compliance of the return submission and or payments. But again, with the whenever you delay your return, straight away there is a fine of 1,000 dirhams. Okay, and besides, of course, the payments when they are delayed, there is also the delayed penalty interest. Right, and wherever we see, because this is just, again, like we said, it is a self-assessment. Wherever we find that we have made errors, there is procedures of a voluntary disclosure. So that's something that maybe you want to exercise, because if basically the non-compliances are discovered by FTA, then the the fines are much higher. In some cases, it's almost like 50% as such. So it's always useful that if there are cases of voluntary disclosures, right, and they have even kind of now relaxed the penalties on voluntary disclosures, especially on late payments, where they say that if you do a VD, okay, within 30 days you can pay the basically the VAT due on the transaction as such, and they do not levy the delayed interest penalty from when actually the VAT was due. So there is some relaxation, and so we need to evaluate wherever possible and make the necessary voluntary disclosures. Okay, so that's as far as the VAT is concerned. I've done a brief overview, right? If there are any questions, I can see some questions on the chat box. So we'll answer all the questions during our Q&A session. So now I'll move on to the corporate tax, which is the new kind of tax which is expected to come in UAE. So just there has been a public clarification document which has been issued, right, which gives a clarity as far as the corporate tax is concerned. So whatever we are presenting here is based on that public clarification document. The corporate tax law has not been introduced as of yet. Okay, we are expecting that the law would come anytime. Yeah, I'll take you through the presentation in terms of what is the applicability of corporate tax in UAE. Okay, I think I don't have to explain to the Indian audience in terms of what is corporate tax, but primarily just in terms of the difference between VAT and corporate tax is that corporate tax would have a straight impact on your bottom line, unlike VAT, which, like I mentioned earlier, if you are efficient as far as your VAT filings are concerned, it should not have an impact on your bottom line as such. Yeah. Obviously, why is corporate tax being introduced in the UAE? I think it's got more to do with the OECD guidelines, and primarily with reference to where effectively, I think basically it was expected that in 2023 jurisdictions that do not have any form of taxation, then the parent company jurisdictions would have the right to levy the taxation on the profits that are generated in the non-tax jurisdiction. So that was one of the compulsions possibly where UAE is also introducing the corporate tax as such. Okay, so primarily also obviously a tax always helps the government in terms of its development and transformation initiatives, right? And And now with the corporate tax introduction, I think UAE joins the countries where effectively on a compliance perspective, right? There would be a lot of transparency. Okay, a lot of good practices would come in terms of when we talk about the entities. Okay, so that's something which is likely to happen. Okay, corporate tax is expected to come for financial year starting on and after 1st June 2023. So what does this mean? So we look at this from with the example as such. So generally what we find is that about 60 to 70% of the entities in UAE are following the financial year of Jan to December. So for these kind of entities, the corporate tax applicability will be from the financial year starting 1st January 2024. When we look at the Indian context, basically most of the entities have the year of April to March. So as far as the Indian entities are concerned, okay, as when we talk about UAE, the UAE branches, subsidiaries, or those entities of the Indian companies, for them, the corporate tax applicability will be basically from 1st April 2024 onwards, right? Now, yes, there is a common question here that should we change our year to take advantage of the corporate tax? Yeah, at this stage, the law is not out, so we are not very clear on the transitional provisions. So until the law is out, we do not recommend any changes in the financial year. Okay, the rates of corporate tax, again, like it has been done with VAT. Okay, corporate tax also is being introduced in a very gradual manner, and it has been kept comparatively simpler. Okay, so when we look at the applicability of the rate, so the first 375,000, the rate of corporate tax will be 0%, effectively $100,000 we are talking about. And above 375,000, the rate which will apply is 9%. Now there is a proviso which is being spoken about that in case of the large multinational corporations, right, which are meeting the Pillar 2 guideline, right, which is turnovers exceeding euro 750 million. So in those, maybe the rate of corporate tax would be higher, and maybe it will be, it could be 15%. Now we look at an example of how the corporate tax would apply. Suppose if the net income is 100,000, right? Like I mentioned, the first 375,000, it would be 0%. And the balance, 125,000, 9% would apply. So the net tax payable would be 11,250. So that's the way the corporate tax will apply as far as UAE is concerned. Now we need to look at some key definitions, and that might be relevant for you as Indian entities. Okay, so now there is a natural person, legal person, and exempt. So these are the three categories when we talk about the taxable persons, right? So largely on natural persons, what has been mentioned is that individuals are liable for corporate tax only if there is a requirement of licensing, for their operation in the UAE. So as general, obviously, when we talk about it, it's not a personal income tax. So any kind of employment income or any kind of, dividends and these kind of receipts that an individual receives, they are out of the scope. Okay, only where there is a license requirement, that is where corporate tax would apply. So for example, freelancers, or maybe for certain businesses where the individual requires a license, those will come under the domain of corporate tax. Legal persons, practically all types of legal persons are basically within the domain of the corporate tax. Okay. Now exempt by far are few. Okay, it's basically the government entities or government companies which are carrying out sovereign activities. Okay, or which are in the business of extraction or exploitation of the UAE national resources. Recognized charities only. There are charities which are recognized by the Ministry of Finance. They are exempt, and basically public and private regulated funds. Okay. or investment funds. These are the only exempt categories as far as the UAE corporate tax is concerned. Okay, on a residency status, again, primarily this is also relevant. If you are a legal person, you are incorporated in the UAE, basically, you would be liable for their worldwide income. So if you are an entity in the UAE, okay, you are liable for your income which is generated worldwide. As far as the national person is concerned, who is required to be registered under corporate tax, he will only be liable for his income which is generated in UAE. And the third category maybe is something that would be relevant for Indian entities, especially if you are operating through permanent establishments. So if these are basically it is effectively managed or controlled in the UAE, then you'll be liable for the corporate tax in UAE. Right. So non-residents, like you're saying, the permanent establishment or the income which is sourced in the UAE, they would be liable for corporate tax as such. And for the permanent establishment, primarily the fixed place of business or the dependent agent test would apply. The fixed place of business is where if you are having a fixed place and you're operating from it for more than 6 months, then in that case, it would come under the permanent establishment criteria. Or you have a dependent agent who is basically practically dependent on you in terms of all the decision making, right? So in that scenario also, it's a possibility that it will be considered as a permanent establishment, and you will be liable for the corporate tax in UAE. Okay, currently, like I mentioned, the corporate tax is being introduced in a gradual manner. So even for legal entities which are there, okay, certain incomes are exempt from corporate tax, where there is a dividend paid by foreign companies or any kind of capital gains, which are generated from the sale of shares, right? So those are exempt. Of course, there is a criteria of that the UAE entity must hold at least 5% of the subsidiary company shares, and the foreign company must be in a tax jurisdiction where it is paying at least 9%. Okay. Now, free zone, this is now starting to, kind of become critical. Okay, so now free zone part of it, there are certain criteria of free zone where corporate tax would not apply. Free zones generally have been given, kind of a basically an exemption. Okay, normally like they say that it is exempt from corporate tax. However, it all depends on the dealings of the free zone. Okay, so if a free zone is basically kind of doing primarily it is dealing with business outside UAE, or it is dealing with businesses between the free zones. Only those kind of businesses are qualified for the 0% corporate tax. So what it means is that again there is a taxability, okay, but the rate of tax is 0%. Okay, so what would be expected is that free zone entities would be expected to kind of register and file for corporate tax. Maybe the rate applicable could be 0 depending upon the transactions that you are undertaking. Now there are certain type of transactions where the corporate tax may be attracted for free zones. Okay, so primarily where if you are having a free zone entity as a mainland branch, then in that case, primarily what will happen is that the free zone related transactions will qualify for 0%. However, the branch related transactions will be charged at 9%. Okay. Now, only basically if you have got passive income like interest, royalties, dividends, and capital gains, that will continue at 0%. One more element where if you are dealing with the mainland and you still can be considered at a 0% corporate tax rate is where effectively you are doing an ex-work kind of delivery and the mainland entity is the importer on record as far as the customs are concerned, which means that actually the mainland entity is importing into the UAE. Okay, in such scenario, if you are having only those kind of supplies, also you can be considered for the 0% corporate tax rate. Okay. If you are having both types of supplies and you do not have a branch, and the mainland entity is not the importer on record, then in that case, the entire income of the free zone entity could be charged at 9%. So this is something that basically the free zone entities have to look at their transactions carefully and see what is the various types of transactions, and possibly look at, if possible, restructuring those transactions. Right? Like VAT, the expectation is that the entities would have to register for for corporate tax and obtain a registration reference. Okay, they have provided that you can basically look at getting an advance ruling kind of thing on your transactions. So that is a welcome development. So primarily, if there are some gray areas as far as the taxation is concerned, the advance ruling could be applied. And as far as the return filing is concerned, it is basically due within 9 months of the financial year end. Okay, and within 9 months, you're expected to file the return and also discharge the corporate tax liability. Okay, again, the same is that the assessment is on a self-assessment basis as such. Okay, so the onus is on the taxpayer to ensure that you are complying with all the rules and regulations, and they reserve the right in terms of reviewing the returns and issuing an assessment order before the time period, the statute of limitation expires. Okay, and record keeping now, like I mentioned earlier, possibly when we talk of corporate tax, obviously the accounting and auditing will start becoming very important, because that's the only way through which you'll be able to prove whether the net income that you are referring to is basically correct, right? So entities which are not doing the primarily proper accounting, or who are not kind of basically getting the audits done, they will be expected. And especially it has been made mandatory for the free zone entities to get their accounts audited as far as the corporate tax is concerned. The rest of the mainland and all, they left it to the respective regulatory authority in terms of whatever their regulations are. Right? I think one of the questions which gets answered is that, when there is no law, or what is it that we need to prepare for? Obviously, one of the things is that what we are talking as far as this part of the world is concerned, they're not used to having the direct taxes as such, and that's where you need to evaluate, because as we have seen earlier, the structure of the entity, the allowable and disallowable transactions, right, the systems that you follow, all these will have to be looked at in terms of the corporate tax regime as such. Also, we have seen varying degrees of accounting and auditing practices. Now, with the corporate tax coming in, we expect all of that to be streamlined. Okay, like I mentioned that there is the element of structuring, whether you talk of a local entity, whether you talk of a free zone. Like we mentioned, the free zone in terms of what kind of transactions they are doing. Okay, there is a provision of a tax group, but however, the requirement is of 95% holding. Okay, so these elements of it will have to be looked at, so that there is an, basically the organization is looking at from a tax optimization perspective. Of course, the more important is that there is an impact on the bottom line. So obviously you need to see that, what kind of efficiencies that you can bring about in your current operations, so that you can minimize the impact in a legal way. Yeah, so that's something that would be required to be done. I think with that, I come to the end of my presentation. Mr. Moni, you want to take over?
Thank you, Mr. Girish. I think your presentation is got over, right?
Yeah.
Yeah, thank you very much. In fact, you explained about the compliance requirements for the companies operating in UAE and what is expected, corporate tax regime going to come. And in fact, taxation is a very difficult subject, which you explained in a very simple way. Thank you very much for the same. And now we have with us Ms. Sandhya Chandrasekhar. She is manager in tax and MCA in MCA Gulf. Sandhya Chandrasekhar is a manager, and she is taking care of compliance function at the MCA. She has over 5 years experience in the field of taxation and UAE compliance at the MCA. She carries out economic substance regulations, which is going to be talked about now in UAE, and other service including registration to filing of ESR notification and ESR report, assisting advisory services, etc. And she's also expert in anti-money laundering law and its compliances and control framework and other assessment, etc. With this brief introduction, over to you, Ms. Sandhya, for your presentation.
Good evening, everyone. Thank you, Mr. Unni, for the introduction. And thank you, Mr. Girish, for taking us through VAT and corporate tax compliance for the entities in UAE and highlighting the action to be taken now. Coming over to the next part of the compliance, which is economic substance regulation, which mostly it is a local compliance, which we would not be much aware of. I would like to first take you through brief why this regulation was introduced in UAE. So OECD is an intergovernment body which monitors the global tax system and the financial flow. So they came up with BEPS action. BEPS is base erosion profit sharing, wherein they came up in UAE asking to implement, because UAE was in a gray list, since many entities were formed with an intention of shifting the profit, being a no taxation jurisdiction. So there were many companies formed outside UAE. Those were they were shifting their operations through UAE so that they can do the tax planning and UAE taxation. So to curb these activities, they came up with this regulation from the entities after having financial year after Jan 2019. So taking you through the regulation, firstly, the applicability. So to whom it is applicable? It is applicable to all the entities registered in UAE, onshore entities, free zone entities, UAE offshore, and branch of foreign entities. There are some conditions for exemption. So if you see, this regulation covers all the registered entities in UAE, be it in free zone or offshore or onshore. And there are some exemptions provided in the regulation. First is investment fund. The other category is entities that are tax resident outside UAE. The third is entities who are owned by UAE residents and all the activities are carried out in UAE. And the last is branch of a foreign entity whose income are subject to tax outside UAE. So if you see, these are the 4 categories where there is no scope of tax evasion as such. Because if you see that in the point number 2, where the entities are tax resident outside UAE, the books, the profits are always taxed in their respective jurisdiction. The third category, where entities are owned wholly by UAE residents and all the activities are carried out in UAE. So there is no MNC, it is not part of MNC, or there is no scope of profit shifting. The last option is branch of a foreign entity. So we say there is some company formed in India, which is the parent entity, and they have a branch in UAE. So being a branch of a foreign entity, the profits of this UAE entity is already considered in the income of the head office, which is taxed in India. So there is no shifting of profit. It is already, the income is considered in India. So in such cases, they can claim for exemption. Such entities have to file a notification to the ministry notifying that we are eligible for exemption. So if you see the following categories like natural person, sole proprietary, trust, and foundation, they are not covered under the ESR regulation. Coming to our next key definition, foreign connected person. which is important for us to understand the concept of ESR. So what is foreign connected person? It is starting with connected person, an entity that is part of the same group as the licensee or exempted licensee. So the group company is a connected person. Now coming to the concept of foreign connected person, we have to see if that particular entity is having any related party outside UAE. And if they are having more than 50% of shareholding in the other entity, thereby requiring the consolidation of books on the basis of IFRS standards, then we can say it is controlled or by ownership, they are related to each other and they qualify as foreign connected person. So why this concept is important? Coming ahead, where we'll understand what are the activities covered under ESR regulation. So there are these 9 broad activities which we have to focus on. So we have to just check first whether we are carrying out or we are falling under any of the category. If yes, then we have to do this compliance. So starting with the activity banking business, which the name itself is self-explanatory. The entities which are into banking business have to, they are defined under this relevant activity and they have to do the compliance. Coming to the next self-explanatory is insurance business, wherein the business is carried out by in the nature of insurance. Now, coming to explain you the concepts which are new are some activities which are covered under distribution and service center, lease finance, holding company business, intellectual property business, and headquarters business. So we'll understand this in deep so that we have to assess if we are getting covered under these or not. Starting with distribution and service center business, as I already explained the concept of foreign connected person which comes into the role over here. So if any entity in UAE, registered entity, is into trading business and they are importing any goods from their foreign connected person, then this distribution particular relevant activity gets triggered. Similarly, service center is if you are providing or exporting any service to your foreign connected person, we have to notify under this particular relevant activity. So if you see many entities, they often import goods from their related party, which is outside UAE. So in such cases, we have to ensure we are notifying it to the MOF. The next relevant activity is lease finance business. So under this business, they are trying to cover all the financing done, like if any loans are provided or any inter-group financings are done for any consideration or any interest. Then in that case, we have to ensure we are notifying under lease finance business. Now, lease business means the entities which are providing goods on lease basis. The other is finance business, which I highlighted if there is any intercompany loan or any group financing done. Also note, cash pool arrangements are also covered under this particular activity. Coming to the next relevant activity, intellectual property business. As we all know, many companies, many MNEs, they have royalties or many intangible assets in their books. So if any of the entity in UAE holds, exploits, or receives gross income from such intellectual property assets, and the gross income is separately identifiable income, like say, for example, royalties or license fees or franchise fees, then this particular activity gets triggered. The next is headquarter business. Under headquarter business, if the company in UAE, it provides any of the services to its foreign group companies. What services now? Those are all senior level services, which say, for example, advisory role, taking responsibility of the overall success of the other group entity, or taking all those senior management decisions or strategic decisions and controlling or looking after the operation of the other entity, and they're earning some consideration out of it for these services. So in those cases, headquarter businesses gets triggered. So now, since we are aware of all the 9 activities which are specified under the regulation, we have to check if any of these activities we fall under. If yes, then this compliance is divided into 2 parts. First is we have to notify. We have to file a notification with the ESR portal, which is to be done within 6 months from the financial year ending. And the second part, we have to file the ESR report which is a return. It would be a detailed report, which has to be filed within 12 months from the end of the financial year. Now, coming next is the economic substance test. Now, what is this? So, as I told you, in the second part of the compliance is the ESR reporting, where we have to file a detailed return report where the details, whatever they are requesting, I'll take you through in the upcoming slides, but giving you an overview of economic substance test. So these are 3 tests which we have to undertake. Now, by the name itself, substance, we have to prove or demonstrate the substance of the entity in UAE. Since this is the key, and they are trying to collate the information and to seek justification for the requirement of an entity in UAE, like to understand, is it really required for an entity to be registered and operating from UAE, or it is just a profit shifting mechanism. So to curb these activities, there are these 3 tests which an entity has to pass to ensure and to pass through the reporting criteria. The first test is core income generating activity. So you have to test in the SIGA first test, you have to prove or demonstrate that all the income main tasks like operations and major tasks are performed from UAE. The second test is directed and managed. So in this test, you have to check if all these directors are there, qualified directors are there for the company, and there are board meetings conducted in UAE, and the directors are physically whether they are present in UAE. So all these criteria related to secretarial practices are checked. The third is the adequacy test. So adequacy test, it is in relation to 3 things. First is whether they have adequate operating expenditure in UAE. So for an entity to demonstrate its substance in UAE, they have to prove that all these operating expenditures, whether they have incurred in UAE, are adequate with respect to the operations conducted in UAE. The second adequacy test is with regards to official premises, whether the company in UAE, they are having proper premises from where they are operating and where their employees are there and where they are operating from. So we might have seen many flexi desks operations taking place, and just for the namesake, they are there. So we have to ensure we are having appropriate space taken or official premises with respect to the operations of their business. And with regards to the employees, as we all know, it is key for any entity to demonstrate the real requirement of whether to be established or not is the number of employees you are having. So with respect to the number of employees, we have to see whether the equivalent number of employees are there in UAE or not with respect to the operations level of the company. So the ESR report which we are filing will be covering all these 3 tests and ensuring whether we fulfill the requirements or not. Coming next to who needs to notify the ESR report notification. So it is if you fall under any of the relevant activities which I discussed before, we have to file this notification within 6 months from the end of the financial year. So for the December 2021 financial year ending, 30th June 2022 was the due date. And what information we are reporting it to the regulatory authority is whether you are carrying out the relevant activity, yes. Whether it has generated any income from relevant activity, so the answer will be yes or no, depending on the cases. And then you have to mention the financial year start and end, and any other information. So what happens is after filing the notification, sometimes regulatory authority, they come up asking for additional information. So we have to even provide that within the deadline. So coming to the next part is the second part of compliance is ESR report, which is an annual report thing. We have to file within 12 months from the end of the financial year. So for the financial year ending December 2021, the due date would be December 2022. So this will only come into picture when you have earned any income from the relevant activity carried out. If there is no income earned, then the report is not required. Now coming to the contents of the annual return, one is the type of relevant activity conducted and the amount and type of the relevant income. And we have to give the details of operating expenditure incurred, the location and place of business and assets used, and the number of full-time employees with their relevant, whether they are fully qualified, and the number of personnel responsible for carrying out the relevant activity. Information showing the SIGA is conducted, like what are the activities? There are some boxes to be ticked, like which activities are performed from UAE. The financial statements of the licensee they demand, and there is a question whether the audit is, whether the financials are audited. So we have to answer that yes or no. So in many cases, we have seen where they are coming up with an information asking for supplementary as audited financials being authenticated numbers. The other is whether the declaration, whether or not the licensee satisfies the ESR test. So there are some declarations on which we have to tick. So we have to ensure whether we are passing all the tests and this report is filed within due date. Coming to the part where the most important part is penalties. As we all have to avoid these penalties by filing the notification and report within the deadline, because if you see the penalties are huge. Like if there is a failure to submit the notification, then the penalty is 20,000 AED. For failure to submitting the ESR report, it's 50,000 AED. Providing inaccurate information, 50,000 AED. And as I mentioned, those 3 tests, if we fail it for the first year, the amount is 50,000 AED. And there is an, if you see the implication, not only penalty, there is also an exchange of information with the relevant competent foreign authority. So it is in such a way that there is an exchange of information. So we have to be more careful of not failing this test. Coming to the next is, if you fail the test for the consecutive year, then if you see the amount, it's 400,000 AED, which is huge. And there is an implication of even withdrawal or suspension of the trade license. So as we all know, this compliance being attracted with huge penalties, the ESR assessment has to be done. Like every year, you have to ensure whether you're falling under any of the activities and you're taking appropriate step by doing the compliance. Coming to the next part is UBO, which is ultimate beneficiary ownership. This is another compliance which was implemented through cabinet decision in UAE, where any of the entities which are registered in UAE and if have to notify to the respective regulatory authority who is the ultimate beneficial owner. That is, who is at the top, the natural person who is the owner, who is having more than 25% of the shareholding or ownership control. So if you see these criteria, where for every entities which are in UAE have to ensure they're doing this UBO declaration, there is a submission has to be done in the respective regulatory authorities portal. So, and also in cases of, say, if an entity is listed entity, then the UBO will be the senior management official of the company. So this is a deemed UBO provision. Coming to the next part, I would like to illustrate with one of the example where, say, ABC is a company, FZCO is a company in UAE. It has Mr. A who is holding 50% shareholding and Mr. B 26%. And Mr. C holds 24%. So if you see by the shareholding, whoever is more than 25, it will get attracted. So Mr. A and Mr. B is the UBO, which they have to notify in the declaration. So the details, the name, passport, and all those details are asked of the ultimate beneficiary owner. The other example, if you see that there might be many entities having held by more, at the top by another entity, and there would be so much of layering and complicated operations. So in such cases, they have to identify whoever is holding and have to go till the top to identify who is the ultimate natural person. So if you see in this example, XYZ FZCO, which is located in Dubai, it is held by 3 other companies, 30%, 50%, 20% respectively. Now this Y LLC is held by Mr. P 100%. And Z LLC is held by another H LLC, which is a company, and then which is held by Mr. J and K 50% each. So if you see, and the other BVI entity, which is holding 20% in XYZ FZCO, is held by Mr. M and N 99% and 1% respectively. So if you see in this whole picture, we have to ensure more than 25% shareholder person is analyzed, and further you have to see how much who is at the top. So by this example, Mr. P, Mr. J, and Mr. K, they are the UBO. So you have to do this annually while there is a trade license renewal. You have to ensure this UBO filing is done. And also, as per the regulation, if there is any change, say change in the shareholder or someone left the organization or the shareholder, there is a change, then in that case, you have to notify it within 14 days from the date of the change to the regulatory authority. Other than that, if there is no change, but still it's an annual compliance which is to be done during the trade license renewal. So please ensure these UBO submissions and ESR submissions are taken seriously and done on time to avoid any unnecessary penalties. Also, the UBO regulation, it has some other compliance or documentation to be maintained. So coming first is maintaining the relevant register on the company secretarial database on an ongoing basis. So we have to ensure all the relevant registers are maintained. What are those registers? First is a UBO register, which is to be maintained with all the details of the ultimate beneficiary owner, and filing the declaration online in the regulatory authority portal. And there is also some registers to be maintained with respect to shareholder and nominee directors or managers wherever applicable. So these all documentations has to be collated and has to be maintained regularly on an annual basis. And wherever there is a change, instantly it has to be within 14 days notified to avoid unnecessary penalties. I hope in our session we have highlighted all the key compliances to be followed in UAE, including ESR, VAT, upcoming corporate tax, and UBO. Over to you, Mr. Unni, for the Q&A session.
Thank you, Sandhya, for explaining very in detail about the ESR and UBO. It's really very informative because it's very new to Indian business entities. Definitely, it will be very highlighting and enlightening for us. I think UAE need more professionals like you for compliance, because so many complaints are coming in UAE. With this, let's open this for a Q&A session. I request all the panelists also kindly join so that we can take some questions. First, let's take a question from the chat box. International finance service business from CommerCity is free. Is they're asking about the charges and all, I presume.
Sorry,
Girish, yeah, Girish, you may want to
which one
address.
is international finance business service from CommerCity tax free? So primarily, I think, like I mentioned, when we talk about the international finance business, we need to understand where it is being kind of provided, because if it is provided to the UAE-based customers, right, then in that context, basically, there might be an element of VAT which would be applicable. And again, when he refers to international finance service business, so again, we'll have to, like I mentioned about financial services, whether it is a margin-based business or a service fee-based business. If it is service fee-based business, then definitely if it is provided to UAE customers, it is basically VATable, right? Similarly, if this business is provided to customers who are outside UAE, then in that case, those will be treated as zero-rated kind of services.
Thank you. The next question is how to get the list of products taxed 5%, zero-rated, non-taxable, etc., where this information is available.
So this is available on the FTA website, but as far as UAE is concerned, like I mentioned, it is not very complex. So if you take out the zero-rated and exempt supplies, right, rest of them are all subject to VAT. And as far as out of scope is where the place of supply is not UAE. So these are very simple definitions. So UAE is not very complex in terms of the from a perspective where we have different categories of HS code, and different rates of VAT. Okay, all we have to see is that is the product going to be, or the service is going to be treated zero rated, exempt, or out of scope. If no, then it is liable at 5% VAT.
This regarding VAT input credit, is it available in future for the period when we are supplying out of scope supply?
So there is two things on the input credit when you are dealing with out of scope supplies, is that if your VAT credit is input credit is exceeding 187,500, then you can register and you can take the basically you'll be in a refund position. So you could do that. Okay, that's where I mentioned about the voluntary registration. However, if you are referring to in the future, right, what we'll have to see is that you can take that the principle which is there is that you can take the VAT credit for taxable supplies. So for example, if you're dealing with goods and you have already supplied the goods, then in that case, anything which is related to those supplies, would not be, you not be allowed to take the input VAT credit. However, if they are admin related, maybe if it is within that period, you might be able to take certain portion of it.
Yeah. Next is what is the VAT exposure for Indian entities exporting to UAE? What do you mean by to say that the importer in UAE of their charge VAT?
Yeah. I think there's also the question about it, and let me clarify this. So suppose if you are an Indian exporter and you are kind of supply, and again we'll distinguish between goods and services, right? So if if you're an Indian exporter and you are kind of supplying goods into UAE, and it is a business which is basically registered for VAT in UAE, okay, so that business would kind of take on the VAT liability. You are not expected to register for VAT in UAE. Now, when you say that business is taking on the VAT liability, what happens is that, let me give an example, that if the goods are worth 100 dirhams and the VAT applicable is 5%. So whenever the party here, the local kind of importer is importing into the country, the customs and the FTA are linked. So automatically on his VAT registration, the profile, the 5% output VAT payable will pop up. Okay. Now, what is that local importer doing? He is basically making onward supply in the UAE. So when he makes his onward supply, on the output, he's going to charge VAT. Okay, so that 100 maybe is selling in the market at 120. Okay, so in that scenario, he would be charging the VAT of 6. But this 5 is also shown as an output VAT. But that 5 is able to take the credit, so that gets nullified, and he ends up paying only the 6 that is collected from the customer in UAE. I hope that makes it clear.
Thank you. From an IT service perspective, when we raise an invoice for an engagement within UAE, we would require to add 5% VAT. Is it correct?
Yeah, so I presume that this entity is registered in the UAE and it is registered for VAT. So yes, if you're providing a service in UAE, it is basically a supply is happening in UAE, so 5% VAT would be applicable.
Next question is, if corporate tax is introduced, how UAE differentiated from many other trade hubs?
Yeah, so what I would say is that because the corporate tax implementation in UAE is at a very gradual level. So if you were to compare with other jurisdictions, it is the rate of tax is only 9%, okay, which is quite a competitive rate. The second part of it is, if you are in the business of largely doing business outside UAE, then as we mentioned that you would be basically liable only for a 0% taxation. The other part of it is, unlike other jurisdictions, when you talk about dividends, when you talk about capital gains, when you talk about withholding tax, none of those are currently there within the, I would say, like the first phase of UAE taxation. So obviously, I would consider that UAE is still quite competitive as far as the corporate tax is concerned.
Thank you. Regarding UBU, though UAE nationals holding 51% of ownership interest in mainland companies, they may not be having control over the companies. Basically, they are the sponsors. In such cases, who will be the UBOs?
Sandhya?
Yeah. For the cases where there was this 51-49% requirement, the UBO would be the 49% the holder, the percentage of shareholder. And we understand, this arrangement is no more there, and the entities can be registered with 100% ownerships. So in such cases, you have to assess separately who is holding more than 25%. So to answer your question, sponsor, other than like the other person would be the UBO, 49% shareholder.
So sponsors may not be responsible, right?
Yeah, because they are just for the namesake, just to comply with the requirement. They are not actually controlling the activities and the entity.
But in the legal document per se, it is 51%, right? So
yes,
legally, they're not UBO complaint requirement not there. As a national, they're giving exemptions.
actually there is one memorandum of understanding. There's one agreement where it is specified it is just for the legal requirement, and actually the other person, he's the actual owner, like controlling the entity and taking major decisions.
No, in case if that is there, otherwise if something
Yeah.
that's not there, then yeah, you would have both of them specified as the UBO as such.
Okay, thank you. What is the impact of the companies who are planning to register their entity in UAE? What is your advice?
It's a very broad question. But largely I think it is it's important for the entities. Obviously, when somebody is planning, from the business perspective, they know what they are doing. So we can only advise in terms of to kind of look at their business from what are they planning to do, and accordingly kind of structure the entity and take the registration. So depending upon whether their business is going to be in the mainland, right, then they possibly need to explore the possibility of being in the mainland, right? But if it is largely the business is oriented more as a transit or kind of a trading hub, then maybe you need to look at it from the perspective of looking at the free zones and how we'll operate from the free zones. And as we have mentioned, now the compliance landscape has got little more complex. So you need to look at it from that perspective also, whether there is any kind of VAT liability which is coming in. In the future there would be a corporate tax element which would come in. And once corporate tax comes in, we expect a dilution of the ESR. But otherwise, currently you also need to look at it from whether you're meeting the economic substance. You're able to demonstrate the economic substance in the country. So that's something which these are the considerations that you want.
Thank you. I think they have to take some professional advice on that before taking a decision. That's better. So next two questions are out of the scope. Still, let me read it, whether if you can give some guidance. Provide insight on Dubai municipality registration.
Where do you want to step in?
Municipality registration.
Yeah, I can speak about that. I believe no, it is mainly because of the cosmetics or kind of products. If these items are being traded in Dubai, then if it is exported from India, then it can be registered by the importer in the mainland UAE. But if it is in the free zone, still if it is sold as a B2B business, still the importer can register. Now, even the producer of the item from India or wherever in the world, they can also do the registration for this item with Dubai municipality. And the registration is mandatory for cosmetics, healthcare kind of products.
Thank you. Another one also is related to your profession. If any Indian chartered accountant wants to set up their practice in Dubai, how we can do, what the risk involved associated with this?
So I think a lot of the people are attracted to UAE because they see the exchange rate as being, currently it is around 20, right? So they see the revenue side of being at 20 as such. Okay, so maybe, all of them should also remember that the expense side is also into 20. Okay, because that is something that you need to consider. We saw this during the VAT regime also. a lot of the entities came from UAE, okay, sorry, from India, and they set up practices out here, okay. And, then when you come here, you also realize there is a cost of doing business, okay. And that is something which, people need to evaluate, okay. And sometimes, in the interest of getting business, we do undercutting, okay. But what we find is that the cost of doing business here is also higher comparatively. And we are not, sometimes, you do not kind of generate those revenues. So my fellow chartered accountant, the only advice is it is not a land which is, having gold payments as such. Yeah, it has got its same risk as what you would possibly encounter in the Indian context.
Thank you. Whether an Indian company wants to start manufacturing operation in UAE, whether the directory is necessary. I think they were talking about 51% shareholder.
Yeah, maybe Vaid or Arjun, you want to take whether on the establishment?
Wait.
So, yeah, if Vaid can take or others, I'll take it.
Yeah, he's speaking on me.
Let me just see the question again.
Actually, you want to know that whether if you want to start a manufacturing operation in UAE, maybe talking about the domestic. I think a director UAE local citizen is necessary as a director.
Okay, he's referring to UAE local.
See see recently there's a change in the licensing in the mainland also. But if they want to start something manufacturing entity, yes, a local is currently required.
Okay, thank you. We are Indian Personal Care B2C company. Now we are planning to open a registered office in FTZ. Are we still tax liable?
So, I mean, again, it is dependent on when you're saying direct to consumer. Obviously, I think you would also cover UAE consumers. That is my assumption. And if you are, in the FTZ and covering, UAE customers as such, then when you talk about the tax, right, both the scenarios, whether it is VAT, okay, because you would be expected to deliver to the customer at his location, okay. So in that scenario, yes, you'd be liable for VAT. And from a perspective of corporate tax, like I mentioned, if the UAE entity is dealing with UAE mainland customers, right? Unless you structure your business of having a branch so that whatever the mainland business is taxed at 9%, and if you have kind of business plans to kind of also cater to outside UAE, then then the business which is done from the FTZ would be basically taxed at 0%.
Just to add to the point of Girish, but one point that needs to be definitely taken into consideration for a bonded free zone like Dubai CommerCity, if you're actually storing the goods within Dubai CommerCity warehouses, you are saving on the upfront payment of the VAT and the customs duty. So from an operating cash flow perspective, that definitely gives a lot more advantage to these direct to consumer companies who wants to set up in the FTZ. So once they set up, they're storing the goods here. They're only paying the VAT, the import duty, once they have got the order and they are delivering it to the consumer in the UAE mainland. Again, if it's cross-border, I think Wahid, correct me if I'm wrong. They are also there's no such from a fee perspective. They get the refund.
Yes, there's no custom duty or VAT when they do cross-border movements
to other parts of GCC.
Correct.
Okay, thank you. That's one similar question for Dubai CommerCity. How can Dubai CommerCity support in being one-stop shop for all our distribution in UAE and other global markets? How you can specifically?
See, specifically addressing the distribution kind of questions. Dubai CommerCity is the whole premise of Dubai CommerCity is trying to build up this community whereby we have within the community partners like MCA, and there are other partners like Hellman Worldwide Logistics who are providing the logistics and e-fulfillment services. So if you are coming to Dubai CommerCity, obviously, we will help get the business entity registered within CommerCity. You're getting a free zone license, you're getting the visa, etc. So the legal part of that is taken care of. But in terms of operationalizing it as well, if you need any additional services when it comes to storage of the goods, first mile, last mile delivery, or even getting things like any financial advisory, we can actually support the full kind of breadth of services that are required for any particular business. We are doing that currently. There are businesses, I mean, there is one that immediately comes to my mind. We are currently supporting, again, with the help of our partners, MCA, one Swiss brand who is setting up in Dubai CommerCity with the aim of expanding their distribution across GCC. And they are taking from us the technology services, be the fulfillment services, then the financial advisory services. So we are trying to become that one-stop shop whereby we can address the customer's need.
As you have strength in e-commerce also, whether you will be able to help them and support the marketing efforts also.
Absolutely. When it comes to e-commerce part of it, the technology platforms, we have our technology platforms to get one business up and running on their brand.com websites, to sell through different marketplaces like Amazon, Noon, Namshi, based on the kind of products. We can definitely help them onboard different platforms. Payment gateway integration, so all the technology aspects of it is taken care of, from creating the brand awareness perspective, digital marketing capability, social media managements, search engine optimization, SEO, paid campaigns. All of those facets of digital marketing is also something that we can support a business with.
Okay, thank you. Is ESR provision applicable to branch of company registered in UK?
Yeah. As I mentioned earlier, there are some exemptions from the ESR regulation. So one of those was branch of a foreign company. So in such cases, if the head office books and the branch income are consolidated in the head office books and they are taxed in UK, then you're exempted from this regulation. Then the second, you have to check if any of the relevant activity is applicable to you. If yes, then you have to file an exemption notification, wherein in the notification, you have to submit the evidence of the taxation, like the income tax returns filed in UK and the consolidated financial statements or so. So in such cases, yes, you can claim the exemption from the regulation.
Yeah, is that fruits, vegetables, spices, etc. attract VAT in UAE?
Yeah, so again, where it is a local supply, so effectively, like we mentioned, the so-called categories of zero or exempt are by far, you can actually count on your fingers as such. Yeah, so yes, fruits, vegetables, and spices does attract VAT in UAE if it locally supplied.
Thank you. Are there any restrictions, extra licenses, tax for foodstuff exports or imports?
Right?
Export from India and imports into UAE.
No, there is
Foodstuff,
no,
I think this also, you already answered similar answer, right?
Yep. There's no additional license or anything. Whatever is the license they are operating, on that they can do the export. But there are certain certificate requirements like halal certificate, those kind of things. Otherwise, no additional.
Yeah. Is tax introduced only at a corporate level or applicable to salaried people as well? I mean, income tax and already I think you answered, but I can.
Yeah, so right now, I think the focus is on corporate tax. And again, my sense is that first the corporate tax has to be introduced, settled before possibly the income tax coming on board. But yeah, it's like gazing into a crystal ball.
Thank you. What do UBO declaration apply to Indian entities if they are related parties in UAE?
So UBO regulation is for the entities that are registered in UAE. So if the entity is registered in UAE, the company is formed in UAE, then with the respective regulatory authority, say DMCC or DCC, or for example, any other regulatory authority, you have to file a declaration.
Okay, thank you. Same way for the ESR purpose, if you have the importer as well as the exporter as well as importer in UAE are related parties, whether this ESR is.
So to answer this question, like if for the criteria, like if in a scenario where the company is registered in India and they are exporting goods to say their related party or third party customers to UAE, it is not concerned, since this regulation is applicable only to the entities that are registered in UAE. So such entities, say for example, the Indian entity is exporting any goods to India to the UAE registered entity. So that UAE registered entity is importing goods from the foreign related person. So in that case, the entity in UAE have to do the compliance.
Okay, thank you. Is any other questions? I think somebody was raising hand, but I'm not able to see if anybody.
I think some Zoom user.
Is it possible to? There are 3 attendees raised hands. Is it possible to unmute them or ask us?
Yeah, I
Hello?
think Crystal.
And Thomas
Yes,
also.
we can
raised hand.
unmute them.
You are unmuting?
Those who will be raising their hand, I will
Yeah,
allow
there
them
is
to talk now.
maybe, yeah, Karan Shroff and Zoom user.
Hello.
Yes,
Yes.
Karan.
Yes, sir. Do you hear me?
Yes, please
Yeah,
continue.
Yes, sir. This is with regard to the ESR. Now, I have a company in India, and I propose to establish a trading office in a free trade zone in UAE, mainly for exports to other countries, specifically the sanctioned countries, since we are not able to have trade directly from India with the sanctioned countries. So now that would be again a company which is the company in UAE would be a company established by a related party. So how would ESR apply to this case?
Okay, the company registered in UAE will be exporting goods to third parties or say outside UAE, right?
Yes, goods don't come into UAE; they just get transshipped out of UAE. I mean, they don't enter the UAE customs, or they go from India directly to other countries via
Billing
UAE.
purpose.
yeah, but
billing
the
purpose.
UAE entity is on the record purchasing from the Indian entity.
Yes, correct.
And then it is supplying to the entity which is outside, or whatever,
Yes.
the third country. Yeah.
Yes,
And
correct.
if these two are related, so the UAE entity would be expected to do the ESR related obligation.
All right, perfect.
Since
Thank
they are
Because it's
importing
importing.
from their foreign connected person. Yeah.
Yes, it's a foreign connected person. You're right.
Yeah, yeah.
All right. Thank you.
Crystal, Zoom user. Yes, please. I think you're registered as a Zoom user, so. Can you mute yourself? Yeah.
I think we can
Yeah,
take the
he's
next.
registered as a Zoom user, but maybe he needs to mute him. Yeah, now he's muted. Yeah, unmute.
Hello.
Yes, please.
Yeah, I would like to have the fee structure of the company setup for the Dubai CommerCity.
Yeah, so this is something we can definitely share. I mean, after the session, you can contact me. I will leave my email address in the chat. Please you can reach out to me, or even you can reach out to Mr. Girish from MCA. We should be able to address the question.
Okay, okay. Thank you. Thank you very much. Thank you.
Who is FIEO? Yeah. Yeah.
Yeah,
Please go ahead.
good evening. My question is regarding particularly having a setup of a company in mainland having 3 nationalities. So in that particular case, how would be the taxation liabilities for 3 of us? So we come from, I'm Indian and the other would be a Maldivian and particularly from a Sri Lankan. So we three, as a three nationalities, wanted to set up a mainland company. So since you're talking about the corporate tax and stuff, how are we impacted on that particular segments?
So as far as corporate tax is concerned, it is something which is levied on the entity. Okay, so we are not in the stage of possibly the personal tax where the nationalities or whatever would matter. But right now, when you set up the entity, that entity would be the one which would be liable for corporate tax. So it doesn't percolate down to the individuals.
So I heard that particularly one of the presentations which you guys were giving, that either the particular person can particularly give the taxations in their home country or in UAE. So as you know, all the three countries has their own systems of taxations. So how are we impacted on that?
So first is what will happen is that your entity in UAE will be subjected to the corporate tax, right? Now, then there would be the element of, I don't know whether you are considering them as subsidiaries or what happens on that front. Yes, on your individual taxation, I think the basically the respective country jurisdictions will apply, right? Primarily, I think if we were to give your example, okay, maybe I don't know whether in your context, whether anything would come back to you in terms of your entity there, okay, for a foreign held, entity. So that's something maybe we'll have to look at it from the Indian taxation or the respective taxation perspective.
All right. Thank you.
Thank you.
Thank you. One more question for this Dubai CommerCity. What is the custom-related benefits in setting up operations there compared to other free zones?
Now, Dubai CommerCity is a bonded free zone. So in Dubai, if you look at, there are bonded and unbonded free zones. So here, whatever goods you stock here, there's no customs duty or VAT is applicable. And even if you export, there's no VAT or customs duty is applicable. Only when you sell the item into the mainland, you will pay the customs duty and VAT. Now, if you compare to the other free zones, our main attraction is our location and the ecosystem services. And we have all the partners ready to provide the support for anybody can, get on to the business and start immediately. But look, most of the other free zones, they have the relationship like, landlord tenant kind of relationship. But here the difference is we have the complete ecosystem support.
Thank you. I think by this we will wind up today's session, because we are planning for 1.5 hours session, which crossed almost 2.5 hours. So it shows the kind of interest even the participants are having, and the kind of knowledge sharing sessions imparted by the learned panelists. And I would thank all the participants here for their valued participation, as well as all the panelists for their valuable knowledge sharing, especially for Mr. Girish Chand and Arjun Sarkar and Santhya and Wahid, and also Mr. Thomas for their valuable contribution in organizing this program successfully. And we also will explore and work with Mr. Arjun whether we can have some delegation plan for your facilities where we can, because this e-commerce is one of the major area which, as you already mentioned, that in India also it's exponentially growing. So let's look at how we can leverage both of us abilities to grow further. And to Girish also, we will let's see how we can work together and see in the future endeavor also. Thank you all.
Thank you so much. Thank you.
Thank you so much for the opportunity.
Thank you.